Hey traders, what's going on? Jamie Saettele here. Welcome to the midweek strategy webinar with SB Trade Desk, or for SB Trade Desk, on April 19th, 2017. So, before we get started, let me know that you can hear, that you can see. AV good, says Pooja. All right, super duper. And we're going to start with the S&P 500. Did that video, I guess, 2 posts ago on the S&P, and when I have, it's kind of tough to, because you really would junk up the chart with a lot of garbage, right? Doing proposed wave counts and everything. But look, it's been no secret that the moves in the S&P have been what we call 3-wave moves, right? Corrective moves ever since the March high. Okay, that hasn't been a secret. The question has been, and still is, do we end up as a triangle from here, like a bullish triangle, or do we end up as maybe 3 down and then a triangle, or even a flat here and then another move lower? Or do we end up as a flat or some sort of complex correction? I mean, really, all that stuff is mumbo jumbo nonsense. It doesn't really matter until you get towards the end of the pattern. So there are levels to watch in the near term. There are reasons to suspect that you might actually have a triangle underway from the March high. And one, what I talked about in that video, is the fact that the alternating leg, in other words, the drop from up here, does relate to the prior leg by 0.618, right? And that's a hallmark of triangles. So, that's something that I think is fairly useful. Now, the problem is I don't have any sort of bullish slope down here, and typically I'm not going to have a whole lot of confidence in a move, or a direction if you don't have a good bullish slope to work with. And so the next bullish slope wouldn't be until down closer to that 22.98 or even 22.85 if things for some reason get really disgusting and ugly over the next couple of days. So very much in the dark and for the S&P, but there are levels to pay attention to. And the next one would be where you would have alternating 618s from this leg, which is 2360, about 2362. And again, this is the CFD, right? So this is the CFD, not futures and not cash. They can be a little different as far as the prices. So that's where I would be looking for the next reaction, regardless of the larger pattern. Okay, so that does suggest a little higher in the S&P, and that's kind of all I'm going to leave it at right now. The more important markets right now, at least the ones that are a little cleaner as far as the big general markets concerned, are actually the bonds. So Kelly just took a short on dollar CAD. Brave man. We'll get to dollar CAD in a little bit. So this here is the bonds. This is 30-year bond. And again, bonds and interest rates move separate. This chart I think I put it in last week in one of the updates, but it was a big deal. We went through last week. We went through the the median line, the bullish median line, and the trend line resistance. Okay, so that is bullish. I do think that we could be getting up towards the 160 level, which would be a pretty good rally from here. You have intersection up there at the end of May, so it's in a while. So this pullback in the bonds today, this is a daily chart. You can see bonds pulling back. That means rates are rising. And we're seeing the dollar get a boost today from that, right? But what I would expect is that maybe you get a little more pullback. You might even come down to test the low from 2 days ago. So we could see some dollar strength, I guess. And again, it's not just rates that are dollar strength and dollar weakness. It's the rate differential. So it depends what's going on in the other parts of the world. But, the dollar for the most part has been, during this period, has been coming off, recently when rates started to come down, as bonds picked up. So that, not necessarily something to dismiss. Anyway, what I will be watching for is the median line to provide support, and that to me I think will be a good tell, especially for something like dollar yen, which is much more rate sensitive, of course, than some of the other ones. If you look at the ETF for the long bond, the TLT, again, it's going to look a little different, but it still suggests that higher levels are probably where we're headed, which means again lower rates. So the big level and horizontal level on TLT on the ETF is 127.21. You have lows back there from April, March of 2016. So good spot to look at there. Gold, obviously huge developments in gold, and did a video here on this one too. The big development, as we know, is the fact that we've closed up through this trend line, 2011, 2012. The top side of that trend line is where I would watch for support, and it is essentially it's in line with the high from February, which to 1264-ish, more like next week. So a pullback into there wouldn't be much of a shock, I don't think, given kind of the emotions that have been running high recently, in the surge we've had. And finally, with gold, what I think is great is how, so when you draw, we're all about finding the angle that the market's trading on. And when we had our bearish angle that we, traded on for so long, well, you would have found it pretty early on, right? So like you top back here, but if we were drawing a trend line, we would have noticed that we hit the median line right on the nose, back on this low in February of 2013. You then had, well, after that 1, 2, 3, 4 weeks of balance before you rolled over. Okay. We have the opposite situation right now, as described in the video from last week. But here is our new slope, and look what we just did. So this is great, right? We went a little above it. I thought we would be able maybe to get up into 1307. And we still could, but the big thing here is that we could have this slope to work with for quite some time now. So the implication from this is that you should be looking for, support after several weeks probably of pause, pullback, sideways trading, whatever. All right, that's at least my thought process with this. Something else interesting, which was kind of noted over the weekend, I updated the long-term chart, the long-term charts for a few things, but gold was one of them. So we have all that described about the first touch here. But what's interesting is the timing between the highs and the lows in the current sequence. And then the crash week, which really what I would call is kind of the realization that the market is in a downtrend. That's kind of what that is, right? When you get your big break. So if we do that here, if we mirror image this guy from the low, you can see that it's essentially the timing like by no means is this a map or a fractal. I mean, I guess it could become at some point, but you've got the low essentially the same amount of time. So this says that perhaps the realization of a gold uptrend comes at some point in July. You know, wouldn't that be something? Where we see not necessarily a crash, but a reverse crash, right? So the opposite of this. Although I'm not sure that you'd be going to 1600, I'd be thinking more like the top of this channel near 1450. But yeah, that's what I'm thinking, is that the timing pivots are about the same. So there's gold, probably the biggest thing to watch right now. Silver, which has the record COT position, is much more a concern to me because of that COT position, but it's tough to be much of a bear on silver given that you just broke this trend line, you held above it on a retest. So as far as silver is concerned, I'm just kind of standing aside. I don't have an opinion on it right here. You know, I like to say sometimes the market, the best call is not to make one. And I think for silver at this point, that is, you know, spot on. Just, I wouldn't really do a whole lot with silver right here. Don't have much of an opinion. Copper, do or die time here. I mean, copper's just getting murdered. And if we don't, oops, there we go. Copper's getting murdered, so it's coming right down through what we wanted to see provide support. So not a good sign. We did have this yesterday from Bloomberg. The industrial metals are diving, right? That's typically the type of a headline that you would see towards a low of some sort. You know, industrial metals plunge, blah, blah, blah. You know, they're talking about zinc, nickel. You know, you can look at even iron ore futures. So right now it's plunging. It just actually plunged a lot in the last, like for the last couple of minutes, right? You can see here. We actually were up at 1% earlier in copper today. So it literally just took a huge dive. This is like the last couple of minutes, literally since I started the webinar. So I'm not sure what happened, if there's some sort of news going on right now that is driving metals, and I saw stocks ticked off pretty hard as well just now. Looks like dollar yen came off 20 pips or so. So yeah, seems to be right at the turn of the hour. Something, sell programs, I don't know, whatever. But yeah, so if copper doesn't find support here over the next day or so, I wouldn't really want to screw around with it. You know, we'd have to just kind of wait until it figures itself out, right? And that's going to complicate things with Aussie, but we'll get there in a second. All right, let's go to the dollar index. It's like the never-ending topping process, right? It really is. It's the never-ending topping process. I mean, here we have the red lines. We've responded to it. It's bearish, but the key here is we're looking for our bearish slope. And if I go to the 4-hour chart, you know, you can see after yesterday's drop, it's been pretty much up all day for the dollar. You know, a lot of this is going to be Aussie, which is getting hit, but dollar yen's ticked up, although now it's coming off again. Let's see here. Dollar yen can't really catch a break, can it? You have gold down 15 bucks at one point today. The Nikkei was up a lot more than it is right now, too. Dollar yen really not really participating all that much. Anyway, we're actually getting pretty close to resistance for the dollar, proposed resistance for the dollar. You can see this parallel again. I don't have a, if there's going to be a slope on the dollar to trade on a the bearish manner, I think that it's probably based on this trend line. The parallel here, where if you extend it off this 1229 low, you get, you have good touches there, right? And like really sharp reactions. No, not too precise recently, but it'll have to do. It lines up with the horizontal level too at 12,256, and we just were a couple ticks from that. So really, we're kind of getting into a resistance area for this dollar bounce already. Okay. And again, this is US dollar, so it has Aussie in it. So the bounce today is fairly strong because Aussie's off 0.8%. But yeah, that's where I'm watching. If that, doesn't, we had, what was it, on Monday? We had 1, 2, 3, 4, 5. We started to get the bounce, and so thought we're going to have a really good setup to get a three-wave rally a little higher from this 5 down. Of course, this happened, and that was the pound. That was the UK thing, right? The accelerated vote or whatever they call it. So so that kind of, to me, it kind of distorted things a little bit. But yeah, just pay attention to 12,256. Not a whole lot of clarity in a lot of these markets right now, as you can see. That doesn't mean individual currencies don't have them, right? We do have individual currencies that look pretty good as far as their levels and trading potential and whatnot. And that's where we're headed. All right, so let's go to Euro. All right, so euro dollar, same chart from last night right here. Look, even if, say this is wave 1 and we're going to go to, this rally is a second wave or a B wave, right? So there's so many possibilities from a wave count standpoint that it's almost not useful to kind of think about them right now, because this could be A, B, C, right? Or it could be 1, 2, 1, 2, although that wouldn't seem to make a whole lot of sense because this is more impulsive than not. So this could be A, B, C, this could be A, B, and then you get a C, or 1, 2 and get a 3. Either way, the levels that seem to be in play, you have the 618 of the drop from up here at 107.77. We have a square root level at 107.73, and there's also, if we were to do this, we have a 1618 relationship at 107.76. So there's a lot there. Who knows? Maybe we'll be getting triggered long down here, and then maybe we'll even be going short up here or something, right? It's a really big level, that 107.70s, and of course you have the median line up there too. You can see I have the blue lines, kind of the area where I would want to be a buyer, being that that's the, cuts through a lot of price action and, for the most part, former inflection points on that stuff. So that's where I would want to be trading, euro on the long side into support. And 106.90, just really good horizontal level, right? And then 106.70 would be your square root level and a decent horizontal level at times as well, including the high from, what was that on, I guess that was Monday. And essentially yesterday's low is the stop, kind of being a behavior change day for me, being a nice burst there. What about the short term, right? I'm sure that some of you have already done this, but I'm sorry if I'm coughing. I'm trying to mute it when I do, because I'm sure no one wants to hear that. But what if I do a shorter term fork here, right? Which you can do. You actually have a pretty good one. So yeah, so that would also give us an intersection with an even tighter, a more precise level for potential resistance up here in a couple days on the upper parallel, right? So it would be something to pay attention to. But yeah, look, I just kind of want to buy, down into this 107.90s, right? I mean, you can see how clean that parallel is. Resistance, watching for support right here. Was hoping to be already triggered and on our merry way, but these things take time. What else shall we view? Obviously, pound dollar. Story of the day yesterday and week and maybe month. So we really have this parallel is just gorgeous, huh? Nailing all these levels. And so I wrote yesterday, range basically was the name of the game for the next day or two, maybe even longer with cable, because we were coming into such huge resistance, and I talked about the volume, right? So here's the volume on futures, and you can see yesterday's volume. I mean, that was pure capitulation up there. So maybe a 1, 2, 3, a nice dip 4. Get ready for 5. But you can see that was the most volume done in an hour since that big low we had after, which is actually also on Brexit stuff, if you will, right? It was Theresa May was speaking back here in January, that January low, which was after that gap down. I believe that was on a Monday, either Monday or Tuesday. But yeah, it's, the idea being that we just made some capitulation. So what you can do at this point is we can actually, you can start to see the markets accelerating the downside when it comes to the dollar cable. But what you can do at this point is, since we have our 128.29 high volume level, we're probably going to be in a choppy trend for a bit, or a choppy correction for a bit. And so if you do get a bounce from here and you drift higher, you can actually look to sell it. And you want to sell it as close to 28.29 as possible, right? I wrote yesterday, I just didn't have it in me to go short and, leave the computer, after that move. Although I, was thinking that we did capitulate and we need to pull back for a bit, probably into 27.05, 27.20. But now we've started to do the process and we are coming off. So if you do get a bounce, you can sell it into the high volume level at 28.29, and you can put a stop above the high from today, right? Not yesterday, that's a little too much, but from today. And today's high, actually I guess today's high technically was Asia, would be 28.60, right? So if you do get a quick move back up here to 28.29 at some point, something I would leave in order, but I wouldn't want to be shorting it if we had already come into here and then turned up. Okay, so that is what I suggest, is really just pay attention to those levels at this point. 28.29 and then 27.05, 27.21, 27.21 square root level, 27.05 February high. And you can see as I scroll back and look to the left in this chart history, generally speaking, that 127 area has been pretty solid as far as, seeing really big behavior changes or really big moves from that level. Even last October, We came into the level and then we bounced, and then that was when we kind of got the crash. There was a period here in December where, that 127.20 area was good resistance. And then, of course, the February high. And then here we are. And then, the best setup, our favorite setup, my favorite setup at least, is the old draw the corrective channel and then look for support on the top side of it. I think it might have been Kelly who said, who nicknamed it for me. It was somebody in here who nicknamed it the slingshot. And I love that name. That's a great name because it's true. The market acts like a slingshot, or the line does. You come into it and it's just, it hits it and then goes. So, yeah, pound, obviously, volatility clarifies, and pound is at this point the most volatile, therefore the most clear, and where I would be most likely to trade, right? So that's what I'll be looking at with cable. What else shall we get involved in? Okay, Aussie, man, I don't freaking know at this point, Aussie dollar. So Aussie dollar, let's see. I think the best thing to do, look, obviously the levels I was looking for to hold did not hold. So for me, I'm kind of out of the game on an Aussie long at this point. The one, it might actually be that it might be that we need iron ore. This is iron ore. Iron future. We might need iron prices to come back and test the former resistance level, right? Rather than copper. This is arithmetic scale. This is log scale. Log scale, you're actually at the support now, and you see we have turned up. Iron's up 3% today, but no one seems to care yet. Of course, no one seemed to care back here when iron started to tank. Anyway, so I'll keep an eye on that chart. But with the Aussie chart, if we go back to the March high, the March 20th high, okay, March 21st high, if you look at it with the bars, this doesn't look like it'd be a 5 down, right? 1, 2, 3, 4, 5. Look at it on close prices, and it's a little better. And in fact, it doesn't violate any rules. 1, 2, 3, 4. It is in 3 waves. And then one more 5. And there's no overlap on the close. This is a 4-hour close, but there's no overlap. So maybe, we do need to go lower for a little bit. Once it starts to clear up, I will be happy to share as always. Just right now, that's what I'm thinking, is that Aussie might need to actually head to that 73.80s area. I'm going to spend more time on Kiwi because that's where I think actually there's a trade idea there tonight. Kiwi CPI, I shouldn't say tonight. It's actually in like 4 hours and 15 minutes. But Kiwi CPI comes out, and there's a lot of banknotes going around about how bullish Kiwi, could be. And I happen to agree with them on bullish potential for Kiwi because, again, COT, which I think I shared recently, but you've got one of the biggest spec buildup as far as the short position in the history of Kiwi. And the last time we had that, or this size of a short position in the specs, was back in July 2015. That wasn't the low, but it was a low for a while, right? It actually gave more to a range. And I think that might be what we should be doing now. A period where we want to mess with a range. So let's go to Kiwi. One, beautiful response slope. Okay. You have two levels below, 69.50, which is actually the NFP level, I think. Is it? No, it's not. It can't be. Can it? Let's see, where am I getting that from? Let's bring this in here. Oh no, it's from it's the level from last week. 69.49 is the level from when Trump said the dollar was too high. It's the hour. What it is it's the hourly close. So that's probably the best level to watch, actually. Anyway, so 69.50, 69.49, good level. Okay, and then you know what? Today's level, we made a high in this outside reversal day. It's actually its daily reversal resistance at 70.42. That's why on the swing updates, I've had 70.42 marked down as a resistance spot for or 70.41, whatever, for a level for Kiwi. Okay, so close of that day, 321. All right, so we have come off of that, obviously. If we go to a 60-minute chart, or you could even go shorter term, you go a 15-minute chart, you can see that you've got a beautiful impulse. 1, 2, 3, 4, 5. So we have 5 down. So this sets us up for, if you get a positive reaction on CPI, it sets you up for an opportunity to fade the move. Okay? Especially if you bottom right here, because the retracements would be valid. So that's my plan heading into CPI. Really 70 70.24 to 70.31, is resistance heading into Kiwi CPI. So if you get a bounce on Kiwi CPI, I think it's a sell. Strict stop above 70.55 or so, because I do think that the bigger picture bullish potential is there. I just think the way to trade it is to kind of be rangy, especially with the 5 down here, but sell a pop and then look for lows, down between 60.50 and 60 or 69.50 and 69.70. Okay. I guess it could also be possible that we could be in a triangle, because obviously this is not an impulse, although you could go A, B, C, but you could go into a triangle from, here, from the March high. see where a 618 alternation would be. 69.41. So that would be a tip off if you went that low and turned up. So yeah, like the idea of some range action in Kiwi. So if you get a pop on CPI, Kiwi CPI coming out, it's a fade with a tight stop. Good reward to risk on that. All right. What about dollar CAD, which Kelly has traded here during the webinar? You took a short, and you'd be about a couple pips in the money at this point. So, dollar CAD. I will say this. At least we were smart enough to get out of the short position. Back here. Now on Monday, when we came in and we had this dip, I said 32.68 could be support. It was. And then we tried to go long at 30, put an order to go long at 33. Unfortunately, it didn't happen. And here we are, a lot higher. So, look, I'm going to give it to you straight on this. Well, I always do. But with dollar CAD, I'm just worried that there's going to be a really strong there's going to be a really strong move. There's got to be a really strong move at some point. We've been in such a range for so long. These are the J spikes, right? This is the chart from last week. Or if you zoom out, you can envision all kinds of stuff here. Like this could be an inverse head and shoulders, and we're just going to go nuts on the upside. I don't think that's going to happen. I think that we could go higher and then make a fake out, right? Like a trap of sorts. I mean, it's hard to argue with the near-term, action on the upside and the reversal down here and the huge volume and all that stuff. So I'll be very nimble when it comes to looking at dollar CAD. Oh, dollar yen. Of course, it drops 30 pips the hour that I'm doing a webinar and I'm long. Oh, we haven't even done dollar yen yet, have we? All right, we'll get to that. So let me go back to this. All right, so with dollar CAD, if it goes to a new high above the December high, then I think it probably is a trap and goes up towards 137 or so before it reverses. Okay, currently 134.66. So what about now? What would I do now? Well, I wouldn't really do anything here. I think Kelly's on the right. If you're really, really short term looking for a scalp pullback, then sure. Right here's a good spot. You have the median line. This is the channel from the May low last year. Okay, this line, this parallel right here, might be the one to, or probably is the one to watch at this point. You can see the touches, support, resistance, and then just recently cutting through some stuff here, even resistance. It would seem a big pullback from here to get down there. It'd be 33.50 or so, but I don't think anyone should be surprised with the moves that you end up getting in in dollar CAD at this point. So yeah, 33.86, 33.50 might be the point in which it's like, okay, maybe we should just get get on the long side. I'm gonna watch this trend line. Pretty simple. Okay, if we start to get some back and fill, it'd be nice to get a move down into there by some point next week, and then maybe turn bullish. Also, thing is too, seasonality. We're starting to run out of time for dollar CAD to tank. Okay, seasonals turn up after April across all the time frames, and in fact, you can see that May has tended to be a pretty good month historically. So yeah, again, kind of running out of time there. Leon asking, what source do I use for seasonal? So this is just the data that comes in on TradeStation, TradeStation software, and I think they use Interactive Data Corp, but I'm not positive because I don't think TradeStation actually has. I have accounts with them in different asset classes, but not FX. I don't even know if they do FX anymore, but they have the charts. So yeah, if we are, look, this is a 3 down. Okay, we talked about that last week, and the possibility of getting that. And then if this is a 15-minute chart now, so if we go 1, 2, 3, if this is wave 3, 1, 2, 3, 4, 5, something like that, your natural spot, if you will, for some sort of a reaction is right here, 33.75, 33.87. That would be your former fourth wave. So that's kind of what I'm thinking. But yeah, not a whole lot of clarity. Really, the only thing that I want to trade at this point is euro and buying into that dip, and then the Kiwi sell if you get the opportunity to do it on a on a rally on CPI today, right? All right, let's go to dollar yen. Kelly, thank you very much, my friend. That's really nice of you to say. Let's see here. All right, dollar yen. So dollar yen, hold on for just 1 sec, okay? Hold on. Gotta mute this for a second. All right, sorry. Okay, so dollar yen, big spot, obviously. The fact that we had gold, so we came into the weekend, or I came into the weekend on Friday, I was like, well, crap, this looks terrible. You've got the gap risk on dollar yen. It could open up and tank to 107.50 or 106.60 or 106.50 or something like that for a big low. Remember, 106.60 is the gap. I still think that comes into play at some point, by the way. But gold was like, not going to do its thing, so it started to come off, and now we've come off, and if gold can continue to come off, at least consolidate for a little bit, then I think dollar yen might be okay to get a bump. I would also watch that S&P level, the 2360, 62, 63 area, right? But I'm not going to be too patient with this trade. All right, I'll tell you that right now. If you get up to 109.85, 110.10, great. Out. Might even be, might even be a near-term short at that point. Here's a short-term chart. Here's an hourly chart, okay? And you can see that I've got a corrective channel going on here, and we actually did just hit resistance on the 75 line. So I would be watching for support on the back at 108.70, which again is the weekly open, which is pretty much where we're long from. But 109.40 is where you get two equal legs up. So you could complete a correction there. So if you get to 109.40, it's probably best to go break even at that point. The interesting thing to me, though, is that the 1618 of this, so maybe you get an A, B, and a bigger C, is actually 110.09, which guess what that is? It's also the former lows, right? So that's why that level is so darn nice. So it would be nice to get a move up into 110.10, and that would be probably the next area to short. In this, in this pair in dollar yen. So that's what I'm thinking. Again, I'll see how it closes today. If we are looking like crap at the end of the day, I'm probably not going to want to stick with dollar yen. Obviously, we'll let everyone know on Twitter as always. When it comes to dollar yen, the Nikkei is always of concern or of interest. And Nikkei's holding up okay today. Nikkei's up, as you can see, 0.63%. 95 points on the futures. It's doing the same thing here on the near term. And if it needs another low, dollar yen's going to get lower yet still. So we'll see. We'll see what happens the rest of the day, and we'll figure out if we're going to stay with it or not. What else? Pound yen. Pound yen is an awfully interesting one, right? Here was that. Take this down a notch. Here was that big old slope line from last night. This goes way back. It's essentially your old channel line. And here we topped on it. So what? I'm trying to get rid of these averages. Okay. Here we topped on it. Obviously, you have a massive reversal. If you were to look at a weekly chart, I get it's only Wednesday, but if you're looking at a weekly chart, you'd see that we're working on a big weekly reversal. So this could be the building blocks of something special for pound yen on the upside. And if I go to an hourly chart, you can count 5 up on pound yen. 1, 2, 3, 4, 5. So this might be a place to short as well. The monthly open 39.65. So this might be a place to put an order for a short this evening up at maybe the month open. 39.65. Your risk would be above 140.20, today's high. And you would have a target probably down near 138 at least, and maybe lower. 618's 37.34, but 38 is a nice spot too. And I talked about that, I think, in yesterday's post. Right? Yeah. just generally speaking, right? 138, kind of around here. So square root level, we did spike into it and we held it a bunch, so I like that. But yeah, I think that pound yen could be a special long if we pull back in 3 here. So we'll be writing about that one tonight too. Dollar Mexican peso. Holy moly. I looked at the quotes today to see dollar Mexican peso was actually a big winner. And I looked at my charts. I had this chart drawn, these slope lines, and lo and behold, look at what happens. This is from a while ago, but this is where it should bottom for if we're going to bottom for a little bit. So it's a nice, we're making a nice weekly reversal here on dollar Mexican peso. Short-term price action, obviously turning up in an impulsive manner, could be putting in some sort of a, if you can get up here and dip, you might have yourself a little head and shoulders or something, but whatever, the bigger picture chart's more important. So I think this is actually a time to be looking at buying dollar mex if that's your thing for a little bit. And also, the seasonals are positive, dollar mex now. Okay. So as much as I think or believe with all of my heart that this top up here in January was like a major top, you're going to have rallies along the way, and this is a great place to have one. Okay. We have done a full on, we've come all the way back to where we were before the election. This is the election, and a lot of that was a spike right after the result. But really, this is the election, pre-election low, right, from October here, the 2 weeks in October. You can see if I go to the daily, this was the election right here, okay. So really, that's what you're looking at. All right, so in summary for me, the best setups to me still look like really the ones for the most part talked about last night. The euro dollar buy into 106.90, maybe 106.70, 90. Give it a zone. Taking that up into 107.70s, but then would be looking for potentially a deeper pullback at minimum from that level. Pound, we have obviously started to pull back, and 128.29 is your high volume level for resistance. And if you get bounces into there, it's a sell to take it down to 27.20 or so, but we'll be looking for a low down as we get close to that 127 area. Dollar yen, a big level, we're responding to it. I'm not going to give it a whole lot of room. I'll see where we finish the day. If we take off on the upside in the afternoon, great. If not, I'll send out a note saying if I'm getting out or not, but I don't want to give this a whole lot of room at this point. Aussie, not really on the same page with me and Aussie at this point, but we could get one more low to finish 5 down from the March high, in which case we would probably be down for some sort of a low near 73.80s, but we'll comment as it gets clarified. And then Kiwi is one that I would be willing to short today if we got a bounce on CPI later. Would prefer to do it up near 70.30. Stops above 70.55, looking for that target down near 69.50, 69.70. And then dollar CAD, not too sure. Like, it's kind of like Aussie for me right now, right? It surprised me in the sense, and how intense the move's been. I was not expecting to see something like this. Basically 133.70 to 133.70 to 134, with centered around 33.86 is a level to watch for dollar CAD support at this point. And Kelly with a question saying maybe a dumb question. Absolutely not. Definitely not a dumb question. But it's a good question actually. You say, if we are looking for dollar CAD to get stronger, will oil be dropping near term? Well, here's the thing: is I'm just not sure about dollar CAD, right? Like, yeah, gun to my head, I'd probably want to be bullish here, dollar CAD, but I probably want to be buying a dip, like we talked about. Here's crude though. And crude has come off obviously sharply. Here's the crude levels though. This level here, we're not really doing anything at it. We're kind of trading right at it, so I'd probably forget about it. It might be the parallels might be the level to pay attention to, these blue parallels, right? Let's see here. This all started happening like right here, like just now, when we started to see the acceleration. I'm still positive crude. That's the thing. It's like I still like crude higher. I mean, we talked about getting a pullback from up here. It's one reason I said that I wanted to get out of, remember, if you recall, I said I wanted to get out of the dollar CAD trade because we had crude at resistance. Sure enough, crude's gotten murdered here over the last couple of days. But on this drop, I'd be looking for crude to come into the support. 50.75 might be a level. That's a level, right? 50.70. So it's still lower. So yeah, you could say allowing for some back and fill and maybe a dip in dollar CAD, right? And a little bounce in crude perhaps. But yeah, maybe we need to see, crude come in a little bit more. And then, maybe that sends dollar CAD finally to some sort of a move higher. And this, who knows, maybe this will be how we turn, like the bigger turn. If we finally get that dollar CAD move, I'll bring another dollar CAD chart. If we finally get that dollar CAD move through the highs, right? This is from December. If we finally get that move through the highs, you're going to have non-confirmation with crude oil more than likely, unless crude oil all of a sudden, falls back here. But what you'd have is a big non-confirmation. So this is the March high. So if you get above the March high in dollar CAD and you're holding the March low in crude, that would set up a non-confirmation, which would then set up for a dollar CAD reversal lower. In other words, a false break to the upside and continuation in crude higher because it's still in this bullish channel. And no one seems to believe that it can go higher. So maybe it can. All right. Okay, so I'm leaving it there. Now we have gone through everything that I've got to go through at this point. And yes, I'm going to leave it there. So good luck. Remember, focus right now, at least for the next day for me, is on that euro trade, maybe trading some pound range, but also the Kiwi, potentially the Kiwi trade. Okay? And that's it. All right, have a great rest of your day, everybody, and we'll get this up and archived ASAP. Okay? All right, bye, guys.